back. The online brokerage industry is closing the year on a high note after individual investors flooded the market, opening at least 10 million new brokerage accounts in 2020. That's a record. Now, it was one thing in the depths of the pandemic when there were no sports to bet on and little else to do. But it turns out, look at this chart, customers are logging into their accounts more now than they were back in those days. For more on the perfect storm here for retail trading, I'm joined by Devin Ryan. He's senior research analyst at JMP Securities. Devin, it's great to have you. I'm really surprised that interest is increasing. What do you make of it?
Kelly, thanks for having me on. Yeah, it really was just one of those kind of perfect storms, as you just mentioned this year, where late last year we moved to zero commission rates, and I think that removed some of the remaining friction in trading. And then, the volatility that started at the beginning of the pandemic really, I think, drove people into the market. And then, kind of those unique conditions of work from home, everyone spending more time online, that really drove in a record level of new accounts. I think people spent a lot of time educating themselves. And so we're exiting 2020 with well over 10 million new customers into the industry, many young and first-time customers. And that drives a lot of potential for future activity. I think the baseline of activity in trading is quite a bit higher today than it was at the same time last year, because you do have such great growth over the past year in terms of new entrants.
I mean, from a top level, I speak with the strategist Brian Reynolds about this all the time, but we were all wondering what would happen with the absence of corporate buybacks in the stock market this year, and retail investors have largely picked up the slack from that, which is absolutely amazing, and you're suggesting it could continue. From where you sit, who are the players, and sort of tell our audience who you think investment-wise benefits the most from this as it continues and as Robinhood potentially prepares to go public?
Sure. I mean, there's so many interesting themes right now. You had a huge wave of consolidation, right? So Schwab just finished the acquisition of Ameritrade, and so now they're going to be focused on integrating that company. But that's a 30 million account firm at this point, so just tremendous platform, and I think they're going to drive a lot of evolution from here in the industry because it is so powerful. There is a lot of earnings accretion that will come from that deal, and so I think that would, Schwab would be one to watch here. Morgan Stanley just acquired E-Trade, so I think that's pushing them hard on the kind of digital strategy and moving a little bit downstream in terms of the size of customers. And so Morgan Stanley would be another firm, I think, that will benefit from that. And then you mentioned, I think there's a number of kind of mobile-first platforms, whether it's the Robinhoods or the Webull's or even eToro, these platforms that have seen tremendous growth over the past year. Are really gaining market share of the industry. And really, I think the key thing here is that it's not just about trading. Many of these firms are going to be adding new tools and capabilities that connect customers to other parts of financial services. So I think the expectation is going to be that they want to go to their app and have access to banking product, have access to other asset management product in addition to just trading.
Well, and that kind of is my next question. We just showed the average trades per day on Robinhood versus some of the other platforms, and Robinhood appears to be winning. Plus, E-Trade is buried in Morgan Stanley, which requires that you take a view on the rest of that business, too, if you want investment exposure. So why should I bet on some of the incumbents here whose app usage and technology and trading activity appears to be running behind Robinhood, which arguably is now the dominant kind of new player in this industry? Why shouldn't I just save my capital for that IPO?
Well, I think, all these platforms have a little bit of a different spin to them. Schwab has tremendous scale, as I just mentioned, and Ameritrade really for active traders is one of the leading platforms. And so combining Schwab's kind of advice base, almost platform where they have a lot of other capabilities beyond just trading, and Ameritrade where they really have a tremendous platform for active traders. I think it's a really strong combination. Not to mention, roughly half of the accounts at those firms, Schwab and Ameritrade, are connected to the RIA customers.
Shepard Smith here. Thanks for watching CNBC on YouTube.